Investing can seem overwhelming, especially if you're new to the game. How do you decide which stocks to buy or when to sell? What if I told you there's a simple way to invest in an entire industry without picking individual stocks? Let me introduce you to ETFs, or exchange-traded funds. Think of an ETF as a basket of stocks handpicked and managed by financial experts. These professionals decide which stocks to include, which to sell, and when to make changes, all with the goal of maximizing returns. Today, we're focusing on sector-based ETFs. ETFs that invest in specific industries like technology, healthcare, or electric vehicles. By the end of this video, you'll know exactly how these ETFs work, why they're powerful tools for building wealth, and how I personally use them in my portfolio. Let's break it down. An ETF is essentially a collection of investments, stocks, bonds, or commodities that you can buy or sell on the stock market, just like a single stock. Now, sector-based ETFs narrow this focus to specific industries or sectors. Instead of investing in one company, you're investing in a group of companies within that industry. Example, if you believe the electric vehicle (EV) market will grow, you can invest in ETFs like DRIV or KARS, which focus on companies involved in EV production, autonomous driving, and related technologies. Why is this useful? Think of it as a fruit basket. Instead of buying just one apple or one company, you're getting a mix of apples, oranges, bananas, and more. If one fruit goes bad, the rest of the basket still holds value. The same concept applies to ETFs. ETFs are incredibly powerful for 5 reasons. 1. Expert management. Financial professionals handle the hard work, researching, selecting, and managing stocks, so you don't have to. They make decisions based on market trends and performance data. 2. Diversification. Instead of putting all your money in one stock, you spread your investment across dozens or even hundreds of companies. This reduces the risk of losing everything if one company fails. 3. Affordability. You can start investing with small amounts. ETFs like DRIV or KARS are priced around $20 per share, making them accessible even for beginners. Some platforms even allow you to buy fractional shares for as little as $5. 4. Regulation and protection. ETFs are regulated by government agencies like the SEC, Securities and Exchange Commission, ensuring transparency and protecting investors from fraud. 5. Flexibility. ETFs trade on the stock market like individual stocks, so you can buy or sell them at any time during market hours. This gives you complete control over your investments. This is how I personally approach investing in sector-based ETFs. 1. Choosing a platform. I use platforms like Robinhood, E-Trade, or Fidelity. They're easy to use, and some even offer commission-free trading. 2. Researching the ETF. Before I invest, I look at the ETF's holdings, expense ratio, and performance history. For example, DRIV's top holdings currently include Tesla, NVIDIA, Microsoft, Alphabet, Honeywell. This diversification allows me to invest in multiple leaders within the electric vehicle and autonomous driving industries. 3. Starting small. I usually start with a small amount, especially if it's a new sector for me. For example, I can buy just one share of DRIV for around $20 and gradually increase my investment as I become more confident. 4. Staying consistent. I invest regularly, whether the market is up or down. This is called dollar cost averaging and helps smooth out the cost of my investments over time. Let's move. How I build my portfolio. I divide my portfolio into 3 main categories. 60% broad market ETFs. These include ETFs like SPY, which track the S&P 500. They provide stability and consistent long-term growth. 20% sector-based ETFs. Here, I focus on high-growth industries like technology, healthcare, and electric vehicles. For instance, I invest in DRIV for EV exposure and XLV for healthcare. 20% emerging themes or markets. This includes ETFs focused on future trends like renewable energy, AI, or blockchain technology. This structure allows me to balance stability with growth potential. But remember, this is just how I do it. Your strategy should align with your goals and risk tolerance. ETFs are one of the most beginner-friendly tools for investing. They let you skip the complexity of picking individual stocks while still giving you access to some of the top companies in the world. Sector-based ETFs take it a step further by focusing on industries you believe in, whether it's electric vehicles, clean energy, or healthcare. What I've learned. This approach has completely changed how I invest. Instead of worrying about which stock to buy or sell, I let the ETF handle that for me. I stay consistent, adding to my investments regularly even when prices fall. In fact, I love falling prices. It lets me buy more of the industries I believe in at a discount. The power of ownership. Think about it. For as little as $20, you can become a shareholder in top companies like Tesla, NVIDIA, or Microsoft through ETFs like DRIV or KARS. These funds make it possible for anyone, no matter how much experience or capital they have, to take part in the success of these industries. My approach. This is how I do it, but remember, it's not advice. Your financial journey should align with your goals, your risk tolerance, and your long-term vision. Always do your own research or consult with a financial advisor before making investment decisions. The bigger picture. Investing isn't just about growing money, it's about creating opportunities for yourself and your family. It's about building a future where your money works for you, not the other way around. ETFs are just one tool to help you achieve that freedom, but consistency and patience are what truly make the difference. Long story short, don't let fear or uncertainty stop you from starting. Begin small, learn as you go, and keep investing in what you believe in. Over time, those small steps will compound into something incredible. If this video helped you see investing in a new way, give it a like, share it with someone who needs this knowledge, and subscribe for more insights. Together, we'll keep building wealth and moving closer to financial freedom. Thanks for watching, and I'll see you in the next video. Consistency and patience are what truly make the difference. This video is for informational purposes only and does not constitute financial advice. Always do your own research or consult with a financial professional before investing.